Hey, it's Tom here and welcome back to the channel. Now in this video I want to do a bit of a first impressions or initial thoughts kind of video on a company that I have recently been looking into over the past week or two. Now, I think there's quite a bit of value to this sort of learning in plain sight mentality, and even though I'm not kind of fully completed the work on this particular stock, I think it can be really useful to put some initial thoughts out there, and then I can always kind of go back and watch these videos and see what I was thinking at the time. And I know that there are a lot of very smart people that watch these videos as well. So if you have any information that you think is worth sharing on this particular company that I will talk about in the video, definitely let me know down in the comments below. If you think there's anything that I've explained in this video that doesn't quite make sense about the business model that you think would be worth digging into further as well, again, let me know down in the comments below. Because anytime I research a company as a potential investment, and I am not even close to making a call on this one just yet around whether I may or may not buy it, but anytime I look at a company for investment, I want to basically know that thing inside out and be able to argue all of the positive points about the company, all the negative points about the company, and understand all of those arguments and try and put together a rational conclusion in my mind. So if there's, like I say, anything you think I should be digging into further, definitely let me know down in the comments. But with all that said, the company that I have been working on the past couple of weeks is a business over in the UK called Naked Wines. The ticker symbol, if you want to look it up, is WINE, W-I-N-E. It's on the London Stock Exchange, and it's a company that actually first got on my radar from Norbert of Punch Card Management. Now, if you're not familiar with Norbert already, his initial kind of background where he became more well-known in the value investing community was actually through the Value Investors Club. He became one of the more popular contributors to the Value Investors Club in the early days of that website. And the guy who started the Value Investors Club, Joel Greenblatt, actually read some of Norbert write-ups on Value Investors Club. I really liked them. A lot of the stock ideas that Norbert put up there worked out extremely well. And Joel Greenblatt actually ended up kind of giving Norbert his kind of seed capital to get his fund started, and that's kind of how he became a professional fund manager these days. If you look up on Value Investors Club a stock called NVR, which is a home builder, and it's just been an absolute cannibal when it comes to share buybacks, it's done extremely well. Norbert was kind of riding that up in the early 2000s and made a whole lot of money in companies like NVR as well as many others. So Norbert has an interesting kind of purchase history with Naked Wines. If you go on TIKR, which is a site that will allow us to see some international shareholder filings for Punch Card Management, we can actually see that Norbert owns quite a substantial chunk of the overall Naked Wines business, and he's purchased it at some very different prices, I would say, as well. So I've gone through the Naked Wines shareholder filings or change in ownership filings for the past couple of years, and I can find a few filings around Punch Card Management and what Norbert did. The very first one I can find is dated the 22nd of January 2020, where he basically came straight out the gate and bought a 4% ownership position in the overall company. So not 4% of his portfolio or anything like that. I'm not sure what Norbert exactly has under management or assets under management, but he bought 4.1% of Naked Wines straight out of the gate. And if we look at the Naked Wines share price in January 2020, it looks like he probably purchased a little over £2 per share. If you look up UK stock prices, you may see that number display more like 200. So sometimes these British stocks are displayed in Great British pence rather than Great British pounds, so that might explain the discrepancy you're seeing there. But it looks like he purchased it slightly north of about £2 per share. Now, Naked Wines was a huge sort of COVID beneficiary, I would say. It pulled forward a lot of their customer acquisition. Naked Wines is a direct-to-consumer wine company. It will ship wine to kind of your front door. So it really did fit very well during the pandemic, and the stock kind of exploded upwards, and the business performed really well as a result. And after Norbert purchasing at about £2 per share, it shot up as high as about £8 per share, maybe even in the high kind of £8 range. In about April 2021, looks like it was the peak. And I can find sort of updated ownership filings for Norbert and Punch Card Management from as late in the piece as about July 2021. So on the 2nd of July 2021, which is the date of one of the filings I was able to dig up this morning, it looks like the price of Naked Wines was about £7.72, or if you're just looking on a Google stock chart, 772 GBX. And that is a very different price to where he initially bought it in kind of the 2p range. So he's bought it as low as 2 and as high as almost 8. And if we look at the stock price today, it's down to about 370 GPX, or about £3.70. So it's down pretty significantly over the past 6 months to a year, and that is largely what's really prompted me to take a much closer look at Naked Wines. Now this video is really going to be focused on the business at Naked Wines. I'm not going to talk so much about valuation. Once I'm kind of further down the track with this one, I may do an updated video on some new findings with Naked Wines, and possibly put up some intrinsic value calculations as well. If you're interested in seeing that, definitely let me know. But for this particular video, it's really just going to be focused on the core business and some of my thoughts on that so far. Okay, now the business model on the surface of things, at least for Naked Wines, is a reasonably straightforward model. Basically, you have a very, very traditional wine industry, and there are some nuanced differences between some of the markets in which they operate. So Naked operates in the UK, which is definitely their most mature business, I would say. They also operate in the US, which is their biggest growth opportunity, hands down, and they also operate in Australia as well. So a few different segments there, and there's some nuanced differences between each, but fundamentally Naked are trying to do basically the same thing in each of those markets, which essentially is to try and cut out a whole lot of middlemen in order to offer customers good quality wine at much cheaper prices than they would be able to get it at a supermarket or at a liquor store, or by purchasing it through one of the sort of online competitors, with subscription wine products and that sort of thing. So the way that Naked does that is essentially by working directly with winemakers. So traditionally, when you go and buy a bottle of wine at the supermarket, really you're paying for the profit margin, I guess, in quite a few different people's businesses. So you're paying a price which allows the retailer from which you're buying that bottle of wine, it allows the retailer to make some money. It allows a wholesaler to make money that retailer will have sourced that bottle of wine from. It will allow the people that have done all the marketing to make some money, and of course, kind of right down the start of that supply chain, you've got the winemaker hopefully making some money as well. Now, what Naked Wines kind of concluded from doing some analysis on that particular supply chain is that there was really a whole lot of money that you were paying as the end customer that was going to basically a whole lot of people, and a pretty large percentage of the price you were paying was indirectly at least going to a lot of marketing kind of expense. Now, if you were to instead just buy that bottle of wine directly from the winemaker, it would be much, much cheaper and more of the value, I guess, that you were paying for. So if you were to buy a $20 bottle of wine directly from a winemaker versus $20 from a retailer, if you bought it from the winemaker, a whole lot more of the value would be in the actual wine itself, as opposed to spending your money on fancy marketing and so on. So the $20 bottle of wine that you would get direct from the winemaker would be a whole lot better quality than a $20 bottle of wine that you would get from a retailer, because we're also paying an extra amount kind of on top of the quality for the wine and how much it actually costs to put in a bottle and so on, to cover everyone making a margin kind of along the way in the supply chain. So that is the kind of basic model at Naked Wines. In terms of the actual product and the business model they wrap around that supply model, I suppose, it's quite an interesting approach, and this is actually one that took me a few moments to sort of get my head around, and I think it's potentially something that has maybe tripped Naked up in the past. So when I first heard of Naked Wines and started doing the work on this, I thought, oh yeah, it's just another subscription wine box service. You pay X amount per month, and every month you have a wine box just turn up at your doorstep, and that kind of is what it is. You turn the subscription off at some point if you don't want it. You turn the subscription back on again if you want to keep getting these monthly boxes of wine, and that is sort of how it works, but not really. The way that Naked Wines actually works from a business model perspective is, rather than paying for X number of bottles of wine each month, basically you still subscribe to the Naked Wine service. you become an angel, as Naked Wine sort of calls their subscribers. But instead of directly purchasing wine, you actually sort of contribute money to almost like a little piggy bank that you have on the Naked Wines website, and you can either use that money in the piggy bank every month, or you can, allow it to build up if you're waiting on a certain wine release or whatever it might be. So I think there's likely a bit of an education element to Naked being successful and continuing to grow. But I think the business model itself is quite powerful. In a lot of ways, it actually kind of generates a little bit of float, kind of like a Berkshire Hathaway insurance company or something, where people are paying them up front. Naked Wines can then take that money and allocate it kind of how they wish. And one of the things that they have been doing in order to, I guess, expand their moat, expand their competitive advantage in a way, is to really utilize those upfront payments from their customers in order to go direct to larger and larger and larger winemakers over time. So from a winemaker's perspective, this is actually a really interesting kind of value proposition as well. So again, traditionally you would have a winemaker that would obviously spend some time making wine, but you would also have those same winemakers having to spend quite a bit of time on marketing and making sure that they actually had a place to sell their wine. That can be time consuming, there can be uncertainty involved in that in terms of how much they're actually going to get paid. They might have to find a couple of different people to sell their wine to in bulk, and it's just not as clean a process as it probably could be. Now where Naked Wines fits into that equation is that Naked Wines can basically turn up to a winemaker and say, I can guarantee that I will purchase X volume of wine from you. You don't have to spend any time on sales and marketing and that sort of stuff. I'll give you a guaranteed contract up front. Just spend your time on making the wine. And by the way, you're probably also going to make more money with us than you would be able to with a traditional kind of path to market. So it really is kind of like a win-win-win business model. By cutting out all of these middlemen who are all trying to make a margin, you end up with a winemaker that has security in terms of a place to sell their wine. They can also spend more time just on the craft of winemaking itself. You have a customer that can now purchase wine up to 1/3 cheaper is what Naked Wines tend to quote in a lot of their annual reports. So up to 1/3 cheaper than they'd be able to buy in a traditional kind of retail outlet. And interestingly, you actually also have Naked Wines who make a very strong margin in their own right. And it's really been quite fascinating as I dig into this more and more to see actually some of the little networks and things that Naked Wines are trying to build up over time. As the business grows, they can go to these winemakers on a larger and larger scale and offer bigger and bigger contracts up front, rather than saying, and these aren't exact numbers, but rather than turning up and saying, I will buy 500 bottles of wine from you, guaranteed. As they scale, they can make larger and larger bets on individual winemakers because it's, a smaller and smaller percentage. 500 bottles, for example, becomes a smaller and smaller percentage of their overall, supply that they need each year. So they can go to larger and larger winemakers and say, instead of saying, I will buy 500 bottles of wine from you this year, guaranteed, they can then grow to a point where they can go to new winemakers and say, I will buy 5,000 bottles of wine from you this year, or I will buy 10,000 bottles of wine from you this year. Those aren't exact numbers, but that's kind of the concept that they're working to here. And in many cases, with these people kind of adding money to their piggy banks each and every month, they actually build up, a nice little community and a bit of a connection with the winemakers themselves. They have some of the winemakers involved in kind of sharing what they're doing online. There's like a little community where there's actually these kind of surprisingly very popular winemakers that are making a great product, and you can see the customer reviews from it and all that sort of thing as well. So hopefully that gives you a nice feel for the actual business model itself and some of the reasons that I'm doing some work on this and getting a little interested in it. I just want to go through some of the basic stats around where Naked Wines stands right now in terms of their scale, potential future growth, and also some of the questions that I still have personally when looking at this one. So I'm going to jump now to the first half 2022 investor presentation. So this came out in November, so It's the first half of the 2022 financial year, not the calendar year. But at that time, they had 947 active angels, which are, these monthly subscribers essentially. They were working with 226 winemakers, and they had a catalogue of over 1,500 wines at this point. Now, one of the reasons that I would say the stock is down a lot right now is actually to do with kind of coming out of the back end of COVID, I would say. So again, I'll put up a screenshot here which will show Naked Wine's direct-to-consumer business. Interestingly, if you look at their stock, it's not really purely reflective of this online subscription model. They were sort of partnered up with a retailer, I would say, up until I think it was 2018. So if you look at the business results sort of pre-2018, they're not super meaningful, but that's just something to note. So in terms of their online business, at least, though, they were growing pretty steadily leading into COVID, and COVID was just a huge tailwind for them. So I'll put up the number of total active angels on the screen here, and you'll see a very clear kind of acceleration through 2020 and 2021. And I guess one of the big unknowns with Naked at the moment is whether there will just be a massive drop off, once we're kind of fully out the other side of the pandemic. There's already been definitely a flattening in that number of active angels, but it's kind of an unknown, and I think one of the reasons that the stock probably is down so much after going up so much from the initial tailwind from COVID-19. So in terms of repeat contributions, though, from the first half of 2016 to the first half of 2022, they grew at 27% a year compounded. But again, that captures these pandemic years, and we really don't know exactly how sustainable those customers might be. Now, in terms of the key markets moving forward, the US is definitely going to be the most significant for Naked Wines. Now, in interviews with the founder and also the current CEO, Nick Devlin, they actually talk in quite a bit of detail about some of the nuanced differences between the UK versus Australia versus the US. In the UK, I think they've been able to communicate their value proposition pretty well, and basically say we'll give you higher quality wine at a lower price, and they've had reasonable level of success in that market. But in the US, it seems to be different. It seems that a lot of people really have it fixed in their head that a $20 wine is much better than a $10 wine, and a $30 wine is much better than a $20 wine, even though that's not necessarily the case. So I think there's potentially a bit more of an education piece to work on here. But nonetheless, and again, I don't typically like to read into total addressable market type stats, but this slide here does kind of give a fairly clear representation that the US is definitely a bigger opportunity. And it's interesting talking about this total addressable market. So one of the questions Naked Wines often gets is, what are you actually putting in that number? Because surely, these wine clubs and things are quite a niche market. You're not probably going to have your typical person that buys a couple of bottles of wine at the supermarket or at the grocery store convert across to Naked Wines. And Nick Devlin's been pretty open about that, the CEO, in terms of being very conservative with how they view their total addressable market. So they've taken out wines outside of a certain price range. They've also backed out quite a few other things that other companies seem to include in their TAM. So the total addressable market that they quote is probably about half the size of what some of their competitors seem to state. Over time, as the business has continued to scale, the margins have grown at Naked Wines in terms of a gross profit margin, at least. Again, I'll put that up on the screen here, but in financial year 2015, that repeat contribution margin, as they call it, was 22.6%. That has been as high as 29.8% in the financial year 2021, and for the first half 2022 it was 28.5%. So some growing margins, again, by taking advantage of their increasing scale over time. Okay, so two final things that I want to cover very quickly in this video. One is a financial metric that Naked Wines uses called Standstill EBIT. I will talk more valuation maybe in a later video once I've fully completed the work on this particular company. But that's something that I just want to mention because I think it's quite an interesting concept, and I wouldn't usually like all these adjusted EBITDA and weird metrics that a management team throws off, but I think this one kind of makes sense. And finally, I've got kind of a couple of questions that I still need to do some work on, and just want to share kind of some of the things that are floating around in my head that I still want to try and figure out with this one. So firstly, let's talk Standstill EBIT. So if you look at the net income or EBIT or one of these kind of profitability metrics for Naked Wines, over the past couple of years it's jumped around quite a bit, but they've never been significantly profitable. In many years, in fact, they've reported a negative net income. Now, one of the reasons for that, I would argue, is really a lot of their capital expenditure. Now, typically when you have capital expenditure, that would not necessarily show up on an income statement or a profit and loss statement. Netflix is a classic example where they have basically the opposite of what we're seeing in Naked Wines here. They look enormously profitable on their income statement. They report positive net income. But they have all of this capital expenditure on creating new content, and their cash flow is actually significantly negative, and their debt has grown over time. Now, of course, you can argue that as Netflix continues to scale, that content spend as a percentage of their revenue will go down, and they'll eventually generate positive cash flows. And I get all of that, but that's kind of the accounting sort of situation at Netflix. In many ways, Naked Wines is kind of the opposite. So you have all of this capital expenditure, but a lot of that capital expenditure is acquiring new customers. So it would be, spending $1 on marketing to acquire, X cents per year in a new business, or, ideally X, number of dollars over time in new business. And Naked Wines are pretty open about their customer kind of payback times. I will put up some screenshots here on what sort of multiples or payback multiples they expect to generate and how long they expect to take. But the trouble from an accounting perspective is that a lot of what I would really view as like capital expenditure and reinvesting to grow the business through marketing, from an accounting perspective, it does show up on as an expense on the income statement. And that's why Naked Wines often display this metric that they call Standstill EBIT. Now, Standstill EBIT is basically taking the existing EBIT, or earnings before interest and tax, for the company, and then saying, this is what it would look like if all we spent was enough on marketing and so on to maintain our existing customer base. So if we wanted to just have a steady state business, pay out positive cash flows as dividends or do share buybacks or something, and weren't that interested in growing, this is what the profitability, or the Standstill EBIT as they call it, would be for Naked Wines. And that was actually about 37.2 million in the first half of 2022. Compare that to the current market cap, and you can see why people like Norbert are probably quite interested in Naked Wines, and that's just a first half number as well. So that's where the Standstill EBIT was for Naked Wines, and I think it's a really interesting metric to kind of keep an eye on moving forward. I would argue you can do something quite similar with a software company like Xero, listed on the ASX, where they have an extremely sticky product, but they spend a lot of money on marketing, depresses their earnings, and it looks like they have an absurdly high PE ratio, which I'm not saying Xero is cheap or anything, but that's kind of just the way that it shows up from an accounting perspective. There's a lot of investment going on in terms of marketing to acquire new customers. Those customers will tend to be very sticky, and in theory at least you can kind of turn that marketing spend off over time. So that really is where I'm at with Naked Wines so far. It's been a really interesting one to dig into and try to understand why Norbert is buying it, try to understand some of the competitive dynamics between existing retailers and so on of wine versus what Naked are trying to do. I really have a couple of kind of key questions moving forward. I really want to try and get a good handle on what I expect might happen as they continue to exit the pandemic. Will their growth slow? Will the business actually shrink? Or will they continue compounding at a reasonable rate over time? They do have only about 1% market share in the US right now, so there's a lot of room to expand that, and they have proven in certain states in the US that they can get potentially to, you know, double-digit type market share. So that's really interesting, but time will tell how they can perform on that, and whether coming out of the pandemic will be a bit of a headwind for them in terms of growth as well. My other question is, why can't other people just copy the business model of Naked Wines? I get that Naked Wines have pretty good scale in the UK now, and it would be a little more challenging for someone to compete with them. But in the US at least, you know, why can't someone else just pop up and do the same thing? Why can't a Costco or a Trader Joe's or something, which Nick Devlin, the CEO, has kind of listed as, you know, in his view, those are the real competitors, not the online expensive wine clubs. So, you know, why can't people like that go ahead and work direct with winemakers to source cheap wine, or maybe cheap wine's not the way of putting it, but high quality wine at below average prices, you know. So those are a couple of things I want to understand. More work to do on sort of the competitive dynamics there, but I thought this was a super interesting one to share kind of where I'm at so far. So that's it from me for this one. If you did enjoy the video, be sure to hit like and also subscribe to the channel if you are new here, and I will see you in the next video. Cheers.